Today we're doing our Broadcast Tuesday a little bit differently because we have Richard here who lives in the Carlsbad area, so we figured why not sit next to each other and do it, right?
Correct.
Yeah. So today we're talking about mortgage, what's happening in 2019. So before we get started, I just want to say thank you to everyone for viewing our broadcasts each and every week. It's because of your likes, comments, and shares that we can continue to provide this free education to you. A couple of our upcoming events, we do have Fun Fact Friday every Friday. This Friday we'll be learning how to add widgets to your KV Core website. And then after a short little break from our national webinars, we will be beginning those again on March 28th at 10 a.m. Pacific Standard Time. And that is going to be about how to create a Facebook lead source campaign. So with that said, let's go ahead and get started. How are you today?
I'm good. A little rainy here in Carlsbad, but getting through it. We need the rain, so.
Yeah, we're not used to it.
No, we're not.
Yeah.
Either of the people who drive on the roads.
No, definitely not. Me being one of them, I'll admit it. Yeah. So we're looking at the mortgage in its entirety for changes this year. So are changes in the mortgage industry something we can expect every year?
Yeah, every year a handful of things are going to change in the mortgage industry, whether it's rates, whether it's income limits, loan limits, program changes. Generally, they like to roll everything out towards the beginning of the year, the end of the year. You know, this year, 18 into 19, we saw significant loan limit increases across the board, VA, FHA, conventional. So yeah, every year that's going to change, like I said, whether it's rates, whether it's programs going away or coming, new ones coming onto the market. So every year, yeah, it's going to change. So ideally what you want to do is kind of find out what's out there. Towards December is when everything's going to kind of start rolling out. So once you get to like mid-December, really start asking those questions, what's going to happen next year? Because you may have that buyer that maybe is $20,000 away from maybe an FHA loan in your area. And then as it rolls next year, that may make it available to him.
So we're asking you these questions at the perfect time then, beginning of the year type stuff.
Yeah. So we did have changes in loan limits, which is the most important thing. Like in Riverside County, the loan limits went up substantially, which helped a lot of people.
Perfect. Can you talk about the mortgage outlook for 2019 a little bit?
Yeah, so we had a rise in rates 2018. We saw that basically from March on, and then something kind of weird happened early to mid-November, rates went down like a quarter, which kind of out of the blue. So, but the trend is going to continue. Rates are going to raise in 2019. They're probably thinking 2 to 3 different times going forward. But again, we had a little surprise at the end of the year with rates going down, which was kind of nice.
Mm-hmm. And you had previously mentioned about the loan limits. So there are new loan limits for 2019, as you mentioned before.
Across the board. So VA, FHA, conventional, everything kind of went up as far as, the limit that program falls under. So if you don't work with somebody, as far as a lender, you can always call me, regardless if you're in another state. Even though I can't lend in that state, I can still do the research for you. Or you can simply go to Google. I mean, Google's really, really user-friendly, and it's as simple as FHA loan limits for, Travis County, Texas, 2019. And there'll be a bunch of links where you'll be able to, you'll check a couple of them, make sure that it's for 2019. But yeah, check that out, because that's going to help a lot of, maybe your clients that were in a particular range that was outside of maybe the FHA limit. So yeah, every year, and sometimes the limits will come down. So check every year. Usually they roll those out about mid-December for government and conventional products.
Okay, and I do see that we do have some people joining us live. I just want to mention that if you are joining us live and you have a question that comes up during this broadcast that you'd like to ask Richard, please go ahead and just type it in the comment box and we'll get that answered for you.
Come on, Kathy, I know you got a question.
There's a few people on here, so that's always an option. You can always type in your questions and we'll be happy to answer them live. We had that fun little government shutdown there for a little while, and I know we had talked yesterday and it may happen again.
Yeah, so if you watch the news, depending on what channel you watch, it's going to happen for sure. Some other channels say it's not going to happen. Either way, in the event that it does happen, one thing to kind of think of, when they did the shutdown just recently, FHA and VA was not affected. We were still able to get certificate of eligibilities. The appraisal still went through. We had plenty of funds for FHA loans. Now, the only loan that it did affect was the USDA loan. So if you're in an area where you do USDA loans, check with your lender, check with whoever you're working with to see if that is going to be affected, this go round. But I try to explain to people, the government's not going to shut things down that make them money. So they're going to keep FHA and VA products going. It'll be the last thing that would be affected just because it's such an income revenue stream for the government that they're not going to, they'd rather send people home and not pay them than, not collect on their, on their income. So.
Yeah, definitely. So it's important to keep an eye out for that government shutdown, especially if it does happen again, which who knows, we're fitting to find out. And will there be a raise in rates this year? Yeah,
I think so. I think if you talk to most people, we're probably going to see maybe 2, maybe 3 interest rise in rates this year. That's not necessarily a bad thing. If you remember back in 2004, 5, 6, rates were in the mid 6s, and there'd never been so much real estate sold ever. So, if the rates go to the high 4s, mid 5s, high 5s, low 6s, that might help adjust prices a little bit. It's going to balance out. So the rates, typically, if rates get into the 6s, prices, will probably come down a little bit. And I always tell people, I'd much rather have a higher interest rate and a lower principal balance on a mortgage because I can manipulate that interest rate. I can't manipulate that principal balance on my home. I just have to pay that off. So if rates do rise, another thing to consider too, work with the sellers, have kind of a game plan going in when you're going to put in an offer. We're going to roll into a time now where you're going to want to start asking for seller concessions for interest rate buy downs. So I think that'll kind of balance everything out. As the interest rates go up, there's still going to be opportunities to get into the lower rates. Adjustable rate mortgages might become a little more prevalent than they have been in the years past just because of where, the environment is for interest rates.
So it sounds like things change all the time, not just beginning of the year. That's probably when we see the biggest change. But we'll probably have Richard back mid-year, end of year, just to talk about what's going on. We like to keep you guys up to date in the mortgage industry. It's important to all real estate agents to have that knowledge and stay up to date with everything. So do you have any last minute words for any?
Yeah, and I just want to kind of say again, I talk to a lot of realtors and they have this big fear of interest rates and, if the rates go up, even if rates were at 7%, if you think about it, if the last time you bought a used car, your rate was probably in the 5, 6, 7% interest rate area, and that's a good deal. 7% to borrow money at even 7%. If you consider most credit cards are in the teens. Now, granted, the money is a lot larger, but don't be afraid of the rates being 5.5%. That's still very cheap money. And like I said, you can still manipulate rates. You can get from the seller, you can get things to buy them down. You can do temporary buy downs. And again, if the rates go up and they get crazy high, then the mortgage prices will probably fall. And then people are going to be kind of in the same position they were when the rates were at 3% and the prices were 30% higher than they were, with the rates higher. So a 5.5% interest rate on any program is still very inexpensive money, especially when you're considering you're only going to put 3.5%, 5% down. So
yeah. Not bad. Well, we do have Richard's contact information in the description of this video. Like he said, even if you're not in California, feel free to give him a call or email him. You can still answer any questions about any state, even though you may not be able to. Yeah, and I can always look it up. We have, we have offices in other states if I need to maybe get more local and talk to somebody in your area. But yeah, I don't have to work with you. If you have questions and you're in a transaction and things aren't making sense, give me a call. It's kind of part of the deal. So his number is in the description of this video, so call him anytime. I think everyone should just call you at the same time.
Yes.
Blow up his phone.
Preferably on a Sunday afternoon.
During the football games? Oh, football's over.
So wait till football starts over again.
Yeah, and then call him. Perfect. Well, thank you everyone for joining us. And next week we will be talking to Success and Happiness Coach Marbeth Dunn. She works with real estate agents all the time, and we're going to talk about ways to live a better balanced lifestyle. I hope you all have a great week, and we will see you next week. Bye, everyone.